Hey traders, Raghi here, and in the premium video we're going to put a number of daily time frames front and center. Alright, so kicking this off with one of the currencies that we are getting so close to in terms of finally getting an opportunity to short, and that is on the US dollar weakness. Now the US dollar has been weakening as the stimulus package has been endlessly unfolding. And then today's initial claims numbers also weaken the dollar as well. So this is great because ultimately the dollar will strengthen. And I know that sounds counterintuitive to the degree to which we are printing, but just suffice to say, it has a lot to do with the way in which debt is denominated in the world, and also the U.S. dollar being the reserve currency. And there's still a lot of demand for dollars. How do we know this? Because the U.S. central bank, has been opening up those swap windows to get U.S. dollars to foreign central banks. So I feel very good about this being an opportunity about the 6,100 level to start with, all the way up to the 21 exponential, which is going to get us into this area around 6180. So 6100 to 6180 on the Australian dollar, US dollar. Now, if you're trading currencies, when that zone is reached, what you then want to do is look at, say, the Australian dollar, US dollar, puts on the Australian dollar, US dollar, or the FXA. Now, this is anytime you have a foreign exchange pair where the US dollar is the second currency listed in the pair. Now, these are fixed relationships. There's no US Australian and Australian US. It's always Australian dollar first currency, US dollar second. When the US dollar is a second currency, the futures version of this and the currency share ETF version of this will all be traded in the same direction, long puts or short. So the closer we get to the 21 EMA, frankly, the closer we get to the 34 EMA wave, the happier I'm going to be to short this currency. And the idea here is to take advantage of one of the weaker currencies, the Australian dollar, against the US in the midst of a retracement, a correction. I think the Australian dollar is probably getting a little bit of a boost. We saw that today on the one-day relative performance. And I believe the reason for that is we're hearing that China's kind of getting back to business. And what's really going to be interesting to see, and this will be interesting if people note, or if know to know. Look, China is a black box. What we know is what they let us know. And that's okay. It's always been that way. But do we really think that the virus is contained in China, and as people get back to work, we're not going to continue to see a rise in cases? We'll see. China took a very, very quick, well, I won't say quick, but they took a pretty hard stance once they did on locking everything down. And so I don't know that's a model for what we'll see in the U.S. A lot of people are saying we might go the Italian model, but who knows, right? It's not my job to guess at that. But what I do know is the Australian dollar is going to benefit from that news out of China. The U.S. dollar is going to weaken based on the news of the U.S., and that is creating this kind of perfect storm to drive this pair higher, and we want to short into that, okay? So this particular pair, we have New Zealand dollar versus U.S. dollar. Now remember, New Zealand is in the same boat, if you will, in its relationship to China as Australia. China is both of these countries' number one trading partner. We'll see how quickly the Chinese economy gets back on its feet, so to speak, and gets moving. But even before coronavirus, gang, there was a macroeconomic productivity slowdown in China. Now, I think a lot of people are looking at the equities markets of a lot of countries and thinking, well, what are you talking about, Rob? The economy is fine. But, I think this is something that everyone's going to learn. The economy is not, the stock market is not the economy. So you can juice the stock market, but you can't really, as we've seen, central banks try and fail. You can't really juice the economy. So in terms of even the People's Bank of China's attempt to sort of keep their equities markets higher and keep the macroeconomic slowdown impacts at bay, I think ultimately you're still going to see what we saw before coronavirus, which was a slowing economy in China. That then, the knock-on effect, is it's going to affect the way in which Australia and New Zealand trade is conducted with China, which is ultimately going to be pretty bearish for that currency. Again, bullish US dollar, bearish Australian, bearish New Zealand. All right, moving on then to the British pound US dollar. I'm going to skip over the Canadian dollar for a moment. We'll come back to it. Same idea here, bouncing higher. Now again, any one of these, well, no, with the exception of the New Zealand dollar US, any one of these can be traded with a currency share ETF. There is no currency share ETF for New Zealand. The currency share ETF for Australia is FXA. The currency share ETF for the British pound is FXB. Of course, we can play pound futures, puts in the FXB, puts in the pound futures, or the pound US. But as we talked about today, as we day traded really successfully, the Australian dollar US and the dollar yen today, even when we're trading futures and or ETFs for these currency pairs, the trade setup, the structure, the pattern, everything I'm looking for relevant price action to set up to trigger the trade is actually coming from the Forex side. All right, so we're getting really, really close. Notice the closer we get to that 21 EMA, the closer we get to the 34 EMA on the low. Yes, I do want to get short these currencies. Okay, dollar Canada. I saved this one for last, not because I don't like it. I think it's a terrific place to get long US dollar, short Canadian, and we're going to do so in a similar place. 21 exponential prop dot, 34 EMA on the high. That's zoned between these green dots and the green line. So why did I keep this one last? Because on the Forex side, it is a dollar Canada buy, but on the futures side, it's a short. And on the FXC, it's a short. Now, why is that? Because in the case of the pair, US dollar versus Canadian dollar, US dollar is first. And because that US dollar is first, it's a long on the Forex, but it's a short in the futures and in the ETF. All right. So that covers the 4 best relationships to being long US dollar. Now, I know there's a lot of questions about euro. Gang, this has not been the best place in terms of trending clarity to buy US. Could we ultimately buy US dollar here? Yeah, I mean, we could even ultimately buy US dollar against the Japanese yen. But both of these are choppy markets. Both of these are chop, unlike the other 4 that I already showed you. So focus on the trends, and we'll put the choppy dollar buys, maybe dollar yen, maybe euro US in the back burner, and focus on where we have the psychological, technical, we have the flow advantage of a trend, not chop. Okay? All right, so that brings us to where we are on these rallies. You know, I've got family members and friends going, Ron, wait a minute. I thought you said this is, can it keep going lower and lower? Remember, gang, we did have these bull trap moves in '08 as well, and they ushered in lower lows. So what on earth are we seeing? We end up with a 3.3 million initial claims number. That is mind-boggling, and probably only the tip of the iceberg. Okay? I say that not because it brings me any joy to say. It doesn't. It absolutely does not. But let's be real. We're only still seeing the early effects of not just the coronavirus numbers, but let's talk about it from a jobs perspective. We are only seeing the early stages of some of these businesses closing. And we can say that most of these businesses are easily going to be work from home or closed, less productivity, into mid-April. I mean, minimally into mid-April. And folks are now just filing initial claims. I'm sure there's a bottleneck. I'm sure this doesn't represent all the folks who are going to file for unemployment. And, there is expectation that we're going to see another print like this next week. Does the equities market rally on that? Is Jerome Powell going to do a Today Show tour to talk about everything that they're doing? How many times can they keep printing at the pace that they are? And let's remember another thing. One of the reasons I think we continue to sort of buy the rumor, and which rumor are we buying? when on earth are we finally going to see this bill, this coronavirus stimulus bill passed and then gone public? Because what's happening is we're having a very, I'll say problem. The setup is that we're having a very prolonged lead up to the signing of this bill, where we finally get the press conference and both sides get to, claim ownership and take victory and take, whatever, right? Take credit. I don't care, right? Politics don't make me money. Looking at the psychology and the reaction of all that does. So we probably have a little bit higher to go before this market says, okay, that's what we get. And then we see how quickly the helicopter money gets to the people. Then we see how quickly the loans get to the small businesses. Then we see how quickly small business can pay rent. We're already hearing Cheesecake Factory can't pay rent. And one of the things that I mentioned in the chat room, by the way, not really a futures thing, but I did want to let you guys know, I think VNQ is going to be a short. I think REITs are in big, 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 big trouble. All right. So this setup is in the notes, which I send out as an alert every single day that I have them. All right. So I think we could rally up a little bit more in the NQ. We could rally up a little bit more in the ES. One of the things that's really problematic right now, and a lot of you are noticing, especially those of you with smaller accounts, is the options pricing on the future side, on the ETF side, is unbelievably expensive because of the implied volatility. These are not the inexpensive options that we played of even just a couple weeks ago. They're pricey. Puts in the QQQ in the area that I'm looking at them for about 50 days to expiration, 50, are like $1,300. Now, that is far less expensive and far less risk than straight up shorting the NASDAQ futures, which is overnight going to run you almost $8,000. And that's if they don't increase margin again. So $1,300 is a little pricey in terms of small accounts, but it is going to still be the best way to do this, which is put on that short. And I'm wondering if we're not going to see a little bit more strength as, again, it seems this endless stretch of how long it's going to take before we finally get this bill passed. And that is the rip specifically. What's a rip? Violent, quick move to the upside. That is the rip that I want to build my short position in equities into. I do believe that's going to be not only the catalyst for our shorts and the broader averages, which, by the way, these are downtrends at this point, but they're also going to likely be where sort of the catalyst for the U.S. dollar weakness that we're seeing. So I think also simultaneously we'll probably see some of the levels that we're waiting for in Aussie U.S., New Zealand dollar U.S., pound U.S., and U.S. dollar Canadian dollar, and their related futures contracts. So those are all looking very, very good. And then we want to start to rebuild those ag trades, soybeans to the downside, soybean shorts. Also lean hogs, looking at shorting hogs again. And then you can also look at cattle. I would say rather than going with feeder cattle, I would go with the live cattle structure. A little wild, I know, but you're seeing these agriculture contracts jump as the market is, again, rallying on the U.S. equity strength and China getting back to business, I would suppose. So how quickly China kind of gets rolling again, just because China's opening the doors doesn't mean people are willing to come out. Doesn't mean they're going to buy cars, drive, get back to commerce, right? But we'll see how long that takes. A lot of optimism surrounding the very dramatic move to the upside that we've seen in equities that I absolutely want to short. All right, wrapping this up with a look at gold. Right now, I don't want to be short gold longer term, but there does seem to be opportunity that every time we tap that resistance around 1700, we can play maybe a day trade or a quick move to the downside. I'd like to see a little bit more prolonged move to the downside, something closer maybe to 1550, even down to 1450, where we'll build another long position, because that's the position that I want to really commit to. And easy to say, look, do I want to commit to long treasuries? Absolutely. I just need a pullback to get us down there. 174 on the 30-year would be great. So let's see if we can get one of those great single or double session sell-offs down into the wave and we'll get that long position all over again. I'm committed to the long side of the dollar. I'm committed to the long side of the 30-year bond and gold. Okay? Hope this covers a lot of these daily time frames that are on my radar. I'd like to see these trigger this week. Might be asking too much because tomorrow's Friday. It might be next week, but I'm absolutely looking to build these positions. And when I do, I will alert them out, which reminds me, make sure you have the Simpler Trading mobile app on your phone. So that way, if you're not in the room and these trades get sent out, you've got the alert on your smartphone. All right. See you in the next update.